Brad, thank you so much for joining us. What's your opinion on what the state of the global economy is at the moment, and what are the key factors and influences in it?
I mean, the state of the global economy is actually quite strong. For the first time in a long time, all of the major areas of the global economy are growing. The US has quite solid growth. Europe now is joining in, growing almost as fast as the US, which is a significant change from several years ago. And a lot of the concerns around China have, at least for the time being, faded. Even Japan, thanks to strong export growth, is doing relatively well. Commodity prices are at a level which supports emerging market growth. So all engines are firing, and there's a relatively solid near-term outlook. I think the big disruption in the system is absorbing the fiscal expansion that is coming thanks to the tax cut and the increase in spending in the last budget agreement in the US. It's a fairly late cycle fiscal stimulus, and it's coming at a time when the US is arguably fairly close to full employment. So it may have somewhat different impacts than a fiscal stimulus that comes earlier in the cycle.
Now, obviously, we've got a president in the White House at the moment that has sort of talked about the US withdrawing in terms of such a global leadership role. What do you think that could do? And will there be any sort of power void that needs to be filled, or leadership role in terms of global economy that needs to be filled by that?
Well, I don't think it's yet clear just what President Trump has in mind with his withdrawal. Obviously, he wants America's allies to spend more on their own defense. And is probably more insistent on that than some past presidents have been. That conceivably could translate into less commitment to supporting some of America's traditional allies in a crisis, but we won't know until there's an actual event that tests President Trump in a more serious way. On the economic side, I think President Trump has made quite clear that he has a different view on global trade than past presidents, and that he's looking to renegotiate many of America's trading deals. And I think that will put pressure on America's allies, both to assume a bigger leadership role in the rules-based global system, but also I think there should be some pressure on some countries to do a little bit more to bring down their own surpluses. I don't agree with everything that President Trump has proposed, but the basic notion that the US runs too big of a trade deficit and some other countries run too big of a surplus is, I think, one does have some merit.
So that's a possible rebalancing, but what about a possible bubble burst? Because we've been in a very sort of good run for a while now, and there's a lot of talk about where we are in the credit cycle.
So interest rates have been low for a very long time, particularly in the United States, but after QE and negative rates in Europe as well. That obviously has supported asset prices, and you can imagine that as interest rates go up, some of the run-up in asset prices will prove more difficult to sustain. I personally don't expect a massive correction. Although I am certainly cognizant that the risk of such a correction goes up when valuations are stretched.
So do you think the lessons therefore have been learned from what happened in the past, historically, and that better mechanisms are in place to stop such a big burst?
Well, I think that some of the very obvious imbalances that had built up in the run-up to the global financial crisis, notably in the U.S. household sector, aren't present to the same degree. So in that sense, I think the fuel for a very serious crisis, underlying fuel, is maybe not as present. Certainly there has been a significant effort to force banks to hold more capital so that they have a stronger buffer against a down cycle. And I think that has been a meaningful reform. I worry a little bit now that there's pressure to pull back on some of the regulation that I think made the system much stronger. So I think there are reasons to think that the world is better equipped to manage a down cycle. But I think there's also a more general point, which is that, at least in my view, the equilibrium global interest rate is probably lower than it has been in the past. And as a result, asset prices naturally are a little bit higher. If that doesn't prove to be true, then obviously markets could face more stress.
But beware complacency.
Obviously, the longer, the higher, as asset prices move up, there's always a risk that people will conclude that asset prices only go up and refuse or ignore the fact that high valuations imply a greater risk of an underlying fall.
There's a huge audience here, 2,300 delegates at this conference. What do you hope to impart, if you like, and what conversations do you think you'll be having while you're here?
So I want to talk about some of the difficulties that the world has faced with successful macroeconomic coordination over the past 8 years. While the world economy is now in a good place, it took far too long. It took 8 years after the global crisis to get there. And I think that when we look back on the course that policy took, we will conclude that on one level, stimulus was withdrawn, fiscal stimulus was withdrawn far too rapidly in 2010 and 2011, that many of the stronger euro area countries, notably Germany, didn't do enough to support European demand in the most intense phase of the euro area crisis, and that the world would have been better off had all of the central banks acted in a more coordinated way and joined the US in doing quantitative easing much earlier. I think the fact that the US did QE first obviously helped support the US recovery, but it also created some difficulties in the foreign exchange market, difficulties that became apparent when the US was withdrawing or pulling back on its monetary stimulus, just as the Bank of Japan and the ECB were going full throttle, which pushed the dollar up a couple of years ago to an unsustainable level and created a certain amount of tension in the global system. So I think when we look back, we will conclude we could have done better. And I would hope that as we go forward, we do a better job of thinking through how the big major economies should respond to the next downturn. I also should just note for the obvious point that a 2% of GDP US fiscal stimulus at this point in time is not obviously conducive to further global coordination.
Brad, hoping that lessons have been learned from the past, thank you so much for sharing your thoughts with us today.
My pleasure, thank you.